Good day, grade 11s. Welcome to my channel. Today we'll be taking a look at bank reconciliation. So bank reconciliation is usually done around term 1. It'll be one of the first things you guys do in accounting. Please pay attention to the video and ensure that you watch the whole video so that you do not miss any information. This is just part 1 of the video. So as soon as you're done watching this part, ensure that you go watch part 2 and part 3 because I'll be explaining the different ways in which bank reconciliation can be asked. So it's important that you watch all 3 parts of this bank reconciliation videos. So if you haven't subscribed yet, please hit that subscribe button and also like if you find this video useful. Without wasting any more time, let's get into our video. So what is bank reconciliation? Bank reconciliation is the process of comparing cash books balances with the bank statement balance. This means that we're comparing the balances that we recorded with the statement that we've received from the bank. It is done to identify differences such as outstanding deposits, checks, or bank charges. It ensures that the bank balance is accurate and up to date. So there are different reasons why we actually prepare a bank reconciliation. One of those reasons is to ensure that all entries relating to cash transactions are accurately recorded. It also helps us detect any fraudulent transactions or any errors or omissions we or the bank might have made when recording transactions. When doing a bank reconciliation, there are usually two parties involved. The first party is you, the business, and you are the creditor because you have trusted the bank with your money. So the bank owes you that money. And the second party is the bank. And the bank is considered a debtor because they have your money. So they owe you this money. So it's important when doing bank reconciliation to understand how the bank sees stuff and how you see stuff. So, for instance, here, favorable balance. According to you, a favorable balance means it's a positive balance. A favorable balance in the business's side is reflected on the debit side of the bank account, and a favorable balance in the bank records is reflected on the credit side of the bank statement. So you see how things are different. And also, an unfavorable balance in your records is recorded on the credit side of the bank account, then in the business's records is recorded on the debit side of the bank statement. So this is actually important to take note of. So I suggest that you write it down. You'll see later on when we're doing our example where this applies, because right now it's not really clear, but as soon as we start our example, you will understand better. Without wasting any more time, let's get into our example. So here, activity 1, we are told to use the following cash journals of Chloe Traders and the bank statement received from AJ Bank to complete the following. Number 1, complete the cash journals. Number 2, complete the bank account. And number 3, complete the bank reconciliation. So whenever you're doing bank reconciliation, those are the 3 things you'll be required to complete: cash journals, bank account, bank reconciliation. So we are given our CPJ, our CRJ and CPJ, our bank statement. So this is the information that they give us, and we are supposed to firstly, now we're gonna prepare our cash journals using this information. So here is our cash journal. So this is your answer book. So now when you're doing bank reconciliation, what you want to do is compare the journals with the bank statement. So you're going to compare the journals, our CPJ, CRJ. We're going to take this, compare all the amounts in our CPJ and CRJ to the amounts in our bank statement, because the CRJ and the CPJ, those are our books. So now we're comparing what we recorded in our CRJ and in our CPJ with what the bank sent us, what the bank recorded in their bank statement. So we're going to check if all these amounts in our CRJ and all these amounts in our CPJ show up here in our bank statement. And we'll also check of in our bank statement if there are any amounts that do not show up in our journals, any amounts that we omitted when we're recording. So now what you want to do is you want to compare. So we're going to start with our CRJ. So the first amount here is 1,900. And another important thing that you need to know is that all the amounts from the CRJ are going to show up on the credit side of the bank statement, and all the amounts from the CPJ are going to show up on the debit side of the bank statement. That's one important thing to take note of. Okay, let's get back into the question. So the first amount we're going to start with here is 1,900 in our CRJ. We're going to come to the credit side of our bank statement and check if it's there. If it's there, we just put a tick next to the amount. And as you can see, it's there on the credit side. You just put a tick because I'm going to put an arrow because I can't use a tick right now, but just put a tick. Then tick it also in our bank statement. Then we're gonna come look at the 4,800 in our CRJ. We're gonna look for it in our BR in our bank statement, and it's not there. That means we have something, but the bank does not have it. That means the bank omitted this 4,800 when they were recording the amounts. So we're gonna circle that amount because we still need to fix it. Now we're gonna take a look at the 2,500. Yes, it's there in our cash receipt. Yes, it's there in our bank statement. That means no errors were made and no adjustments needs to be made. So we're just gonna tick that amount and also tick it in the bank statement. Then now we basically done with our CRJ here. This is just a total for the CRJ. But then if you take a look here in your bank statement, there is 2,400, but that amount is not there in our cash receipt journal. That means we forgot to record something. When we were recording in our books, we made an error. We did not record this 2,400, but the bank recorded it. So that is what we're going to fix. So we're going to circle this 2,400 because we're going to fix that amount. That means this 2,400 is the one we're going to fix here in our answer sheet. This is what we're going to fix. This is what we're going to be recording. The bank recorded it, there it is here, but we don't have it in our books. That's why we're going to fix it. Now let's go to the amounts in the CPJ. 2,200, look on your debit side, 2,200 is there. So you're going to tick it in your books and also tick it in the bank statement. The next amount is 1,900. Look for it, it's not there. We're going to circle it. That means the bank omitted an amount, which is the 1,900. Then 1680, it's there, we tick it. Now we look at the 6,400, 6,400 is there, so we tick the amounts. But now, if we take a look in our bank statement, there's 29 and 56, and these amounts are not showing up in our CPJ. That means we omitted an amount, but the bank recorded it. So we're going to circle those amounts because we're going to fix them. So this is additional information they provide us with. The bank account in the general ledger has a favorable balance of 13,890 on 1 January. This information is what we're going to use to prepare our bank account. So now let's focus on fixing the amounts that we omitted. So the first thing we're going to do is record the totals, because the totals for our CRJ and our CPJ are our opening balances. Those are our balances brought down. So we're going to start by recording the total for our CRJ, which is the 9,200. We're going to come record it in our CRJ, 9,200. Now we're going to record the amounts that show up in the bank statement but do not show up in our cash receipt journal. We're going to record it here. We're going to add that amount, and that amount is the 2,400. So we're going to put that amount there. Then when you add the two up, you're going to get 11,600. So any amounts that we have in our cash journals but the bank does not have in their BRS, we fix that amount in the journals. But any amount that the bank, oh my bad, I was saying any amount that we have in our cash receipt journal but the bank does not have, we fix that in the bank reconciliation statement, which we're going to do after we're done with our bank account. But then any amount that the bank has in their bank statement but do not show up in our journals, we're gonna record them in our journals. So any mistakes that we make, we fix them in our journals. But any mistake that the bank make, we fix them in the bank reconciliation statement. So now we're going to record the opening balance for our cash payment journal, which is the 10,280. Now we're going to come here, look at the amounts that are not showing up in our CPJ, and it's the 56 for service fee and 29 for cash deposit fee. So these two are usually added together because what they are called is bank charges. So any transaction that falls under bank charges, we add it together and call it bank charges. So we're going to add the 29 and the 56 and record it as 85 Rand. So once you add the two, your total is going to be 10,365. Done. We've completed our cash journals. Now we're moving on to the second thing that was required, which is complete the bank account. Now that we've completed our cash receipt journals and cash payment journals and we recorded all the errors and omissions, we now record those totals that we got in our CRJ and CPJ in our bank account. So remember the additional information I said we're going to use to prepare additional account. This is the information that we're given, that the bank account in the general ledger has a favorable balance of 13,890 on 1 January 2021. This is what I was talking about in the beginning of the video. If you forgot, feel free to go back and look at it when I was talking about the favorable and the unfavorable. So now they tell us that the bank account in the general ledger has a favorable balance. So what that means is that it's on our balance brought down will be on the debit side. If they said it was unfavorable, it was going to be on the credit side. Our balance brought down was going to be on the credit side. So favorable balance, debit side, unfavorable credit side. So our balance brought down is going to be 13,890, but on the debit side. So to do our bank account, we're going to need the totals that in the CRJ and CPJ that we adjusted. This is the one that we adjusted right now. So firstly, we're going to record our balance brought down on the debit side, 13,890. That's the balance that they gave us here. That's the balance we're recording on our debit side. Now, all our CRJ amounts come on the debit side and all our CPJ amounts come on the credit side. This is just a normal bank account. So we're going to record our CRJ amounts on the debit side and we're going to call them total receipts. 11,600 is just this amount from here. We record it in our bank account. Then all our cash payment journals amounts are going to come on the debit side. So we're going to call that total payments and 10,365. Now that we've done, this is all you have to record in your bank account. Now we close off the bank account. So we calculate which side is the bigger side. So in our case, the debit side was the bigger side. So our balance carried down is going to be 25,490 minus 10,365. Where did we get this 25,490 from? We added the bigger side, which was the debit side. So now we're going to take the debit side, which is the 25,490 minus 10,365, and that's going to give us our balance carried down, which is 15125, 15,125. That means our balance brought down is going to come down here and it's going to be the same amount. So now we've successfully completed our bank account. Now we have to complete our bank reconciliation statement. Now we are completing our bank reconciliation statement. So whenever you're doing bank reconciliation, it's always going to be those three things that you need to do. Number one, the journals. Number two, the bank account. And number three, the cash receipt journal. So you might want to take down the format for the bank reconciliation statement because it's important. So Like I said, any errors that are made by the bank, we fix them in the bank reconciliation statement. And any errors that were made by us, we fix them in the journals like we did in the first step. That was us fixing our mistake, recording the amounts that we did not record, that we omitted but were in the bank statement. Now we are recording amounts that the bank omitted but were in our books. So the first thing that you write here is balance as per bank statement. Now I know what you're thinking. Why don't you just take the balance that you are given here, this balance brought down, and write it as your balance as per bank statement? No, that is not what you do. This balance brought down is not our opening balance. So what we do here, we don't have the balances per bank statement, but that is what we are planning to calculate. So you leave it blank because our balance as per bank statement can either be on the debit side or on the credit side. It'll function as our closing balance. So you're gonna see once we're done with our calculations by the end, we are gonna have our balances per bank statement. Please do not take the balance brought down that was given on the bank statement before. This we're gonna calculate it now. So then down here you come and put your balance as per bank account. Now where do you get the amount for balances per bank account? You have it already. It's that amount that you recorded when you're doing your bank account. So our balance brought down is on the debit side. What we do is you copy and paste. If it's on the debit side, paste it as it is. Write it as it is on the debit side of your bank reconciliation statement. You get a mark for that. Even if your amount is wrong, but just by copying it and putting it on the right side, you get a method mark for that. So our balances per bank account is going to be 15,125, which is the same as this one that we calculated previously in our bank account. So you just copy and paste. Now, now that we've done that, we're going to record those amounts that we had from our CRJ but were not in the bank statement. We call those amounts outstanding deposits. So you write it like this: credit outstanding deposit. Because why are we crediting it? Crediting it because, like I said, all the amounts from CRJ, you're going to find them in the credit side of the bank statement. And all the amounts from CPJ, you're going to find them in the debit side of the bank statement. That's why we say credit outstanding deposits. So, like I said, that 4,800 that was in our cash receipt journal but was not in the bank statement. That means the bank forgot to record this. The bank omitted it. And like I said, any errors made by the bank, we fix them in the bank statement. So since the bank forgot to record it, we are going to record it for them on the credit side, 4,800. Now we done with the amounts from CRJ, we need to record our amounts from CPJ. So the amounts from CPJ, we call them outstanding EFTs. We call those amounts from CPJ outstanding EFTs. And we debit those amounts because remember I said that all the amounts from CPJ debit side, all the amounts from CRJ credit side. And when you recording your amounts from CPJ, you have to put a colon and then write the EFT number like they give you. For example, here they told us that this is EFT 166. So we write it like I said, debit outstanding EFT and put a semicolon and write the EFT number. It's important that you show the EFT number. So that 1,900 that we circled, we're going to record it here on our debit side. Now that we've done recording all the amounts that were omitted in our CRJ and CPJ, we're now going to add the bigger side. So between the debit and credit, you need to find out which side is the bigger side. In our case, the debit side is the bigger side. So we're going to add the two amounts in the debit side. That is going to give us 17,025. 17,025. That's the bigger side. So you write it on the debit side and on the credit side. Now that you've gotten your bigger side, you're gonna subtract your smaller side, which in our case is the credit side. So 17,025 minus 4,800 is going to give you 1,225. And you see, notice it's on the credit side. This is like basically we're closing it off. Where the smaller side is, that's where the balance carry down will go. So it'll go on the credit side. So if the credit side was bigger, this 1,225 was gonna go on the debit side. But in our case, since the credit side is smaller, it had to go on the credit side. So you've successfully completed your bank reconciliation statement. It's really easy. That's how you do it. Just 3 steps. Number one, the cash journals. Number two, the bank account. And number three, the bank reconciliation statement. That's the end of the first part of this video. So please ensure that you watch the second part and the third part, because the third part is really important. It explains how they usually assess it. They also assess this one, but the most assessed one is the part 3. So please ensure to watch the second part and the third part of the video. If you found this video useful, please consider subscribing, liking, and share. Also, comment in the comment section if there is anything you did not understand that you would want me to explain again, or any topic that is giving you problems and you'd like me to tackle. Thank you and bye.